Hey everyone, this is Brant from Wolf on Wall Street Trade with a quick follow-up to last weekend's video. A lot of stuff happened this week. One of the first things I want to cover is something I mentioned in last weekend's video. I mentioned it because it just came out last weekend, and that was DeepSeek, China's R1 release, which caused the S&P to come down about 1.5% on Monday. Here's a quick clip of that video from last weekend.
I'm not going to get into it in this video, but for subscribers, next week we'll be taking a closer look at China's DeepSeek R1 AI. So this is open source release, and from all reports, it's on par with OpenAI and 27 times cheaper than OpenAI's O1, which calls into question the hundreds and hundreds of billions worth of CapEx that have been poured into AI by the U.S. tech giants.
Okay, and we had a very ugly reaction to that on Monday. You can see the S&P was down about 1.5%, the NASDAQ down 3% on the day. Semiconductors just got hammered, down over 9% on Monday. We got a little rebound in semis. We'll get to that in, well, actually, let's just take a look right now real quick. My forecast for subscribers was that we saw this kind of bear flag that would broaden out a little bit. It would at least back test this trend line and also a trio of moving averages that have kind of converged together on the daily chart. And you can see those here, the 50, 100, and 200 day back tested into those on Friday. As far as NVIDIA, this is the stock really that's at the most risk, because if you can do a lot more with a lot less in chips, and there's still a lot of questions around DeepSeek with regard to that, it's not good news for NVIDIA. Here on the daily chart, you can see price just came down and has been hanging around this 200-day moving average. But if we look at a intraday price chart, we see something a little different. We see what looks like maybe a bear flag in the early stages. Remember, NVIDIA doesn't report for about another 3 weeks, or it could be a symmetrical triangle. It doesn't matter. Either way, it's a bearish consolidation right now. And NVIDIA, I've been saying that semis are the canary in the coal mine for the tech sector, and obviously NVIDIA is the canary in the coal mine for semiconductors, so not looking great there. Another thing I talked about last week was a change in character. We had been looking at Apple, which had looked very ugly since it topped out in December, and we got a sudden change in character in 3C last Friday, a week ago. So here's that clip from last weekend's video.
It's just been an absolute disaster in terms of price action. And if we hop over to 3C and late, kind of like on Friday, so we see improvement.
And here's where we were in price with this kind of bear flag. We saw the change in character right over here on the 24th, which was Friday in 3C. And then this week we see a nice rebound in Apple, a bullish consolidation right into earnings, a 4% gap up. The issue that I have with Apple is, number one, China sales have already fallen significantly. iPhone sales, sales across their spectrum, and China is their second largest market. So with tariffs, and President Trump just put tariffs on Canada, Mexico, and China, where do you think China is going to hit back with retaliatory tariffs? I think Apple. So we got this 4% gap up, nice gap up to earnings, which were not fantastic, but a little better guidance. And we just see this bearish engulfing candle on Friday. Part of that was the tariff announcement on Friday. If we look at this on a daily chart, here you can see that big gap up on Friday morning, 4%, 50-day, 100-day, a bearish engulfing candle. Did find some support there at the 100-day, so we don't know what the Chinese are going to do in terms of retaliation with tariffs going into effect on Canada, Mexico, and China, as I just mentioned. Here's that big improvement I was talking about in last weekend's video in 3C that pulled us out of this bear flag, invalidated it, brought us into a bullish consolidation into earnings. But we really haven't seen any confirmation, especially Friday morning with the big 4% gap up. It's still looking kind of like a consolidation in here. I think that's because the 100-day is acting as support, but we will see very shortly what happens with this. I suspect probably as soon as next week on the 3C charts. Speaking of tariffs, here's the S&P 500. The whole reason that we got this bounce off of the low over here was because there was no day one tariffs in President Trump's executive orders when he first came into office, right? So here's this week, here's DeepSeek. Here is our kind of bounce to fill this gap. And then here is the announcement of tariffs on Friday. We have a bearish engulfing candle in the S&P 500. We have a bearish engulfing candle in the Dow Jones 30, which is also meeting resistance here around the 45,000 level. We have a bearish engulfing candle in the NASDAQ 100 over here. And then as far as small caps, they've kind of run out of steam recently in sort of a consolidation in this area between the 50-day as resistance and the 100-day as support. We have seen a lot of day-to-day rotation, which is a good thing, moving back and forth between growth and value. That is helpful for a rally. But as far as the cyclical value, economic growth rebirth with Trump coming into office, we haven't seen a lot of movement in that recently. One of the big points I was making last weekend, and I think even in the video the prior week, was that this is becoming more and more a trader's market. And what I want to do is show you the S&P 500 on an intraday chart, 60-minute. And notice what we're seeing since the election. Right over here, here's the gap up on the election when President Trump won the election. We're seeing a broadening formation of higher highs and lower lows. I'm not sitting here calling this a broadening top yet because it's really not that big. But what it is signifying is that we are seeing a lack of intelligent institutional sponsorship. We're seeing a market that's moving more and more on rumors and news. That is exactly what defines a broadening formation, which really is just a depiction of chaos. But if you are a trader, if you are a swing trader, these trades, these swings are getting increasingly large, and there's no reason, in my opinion, if you have the time and you have the risk management and you have the risk appetite, there is no reason not to be taking advantage of these swings, both on the long and the short side of the market. A couple of weeks ago in my video, I said if the NASDAQ 100 holds 20,800, it was right here when I made that video. If it holds that the next week, which was right here, that we would see a nice bounce, and we've gotten a nice bounce. But also what I want to point out is this chop, are these swings. So these are actually a great environment for swing traders. If we take a look at the technology sector, the most heavily weighted sector in the market, we are seeing a right angle broadening formation where we have this area of resistance, but we're making lower lows. So you can see these swings, each of these swings are getting larger and larger in amplitude. Again, in my opinion, there's no reason not to be playing these. As far as tariffs being announced, I've read a lot of good analysis from people, very smart people on both sides of the issue, whether tariffs are inflationary or not. All I can tell you is that the reaction on Friday to tariffs being announced in effect as of today was inflationary as far as the bond market. So we didn't see a flight to safety. We saw yields move higher, so I can demonstrate that real quick with S&P futures here, and this is the 10-year Treasury future, which moves, price moves opposite of yield. So when we see this sharp decline on the announcement of tariffs, this is actually yields moving higher. If we take a look at yields, in my opinion, we're in a really tight zone that is very important for the 10-year. First of all, notice the trend since September has been up, and we have this kind of consolidative look over here. In my opinion, 4.5 below 4.50% right over here is a tailwind for stocks. Above 4.60% over here is an increasingly challenging headwind for stocks. So we only have 1 day of Treasury action to go by, actually less than a day, basically an afternoon with regard to tariffs. We don't know what these other countries are going to do, but the initial reaction, as we can see here, is one of that they're inflationary. As far as the broader market, here's our DeepSeek sell-off on Monday, and we have I don't want to say it's quite a bear flag, but it's got a lot of similarities to a bear flag. It did fill this gap, which prevented us from having an island top right over here, which has been the case in the prior pivot down since mid-December. So we filled that gap, but as you can see with the news on Friday afternoon about the tariffs, we are trading below that. My gut instinct is that we'll maybe come down a little bit more, back test this. But from the 3C charts, it does look like we're about ready to make another swing lower. We need a little bit more information because we only had a couple hours of market reaction to the news. 25% tariffs on Canada, Mexico, and 10% on China. So for subscribers, we'll be watching those 3C charts again as we move into the start of next week and more earnings. We have some more mega caps reporting next week. Please, if you enjoyed this video, give it a thumbs up. Let me know what you think about tariffs. Are they inflationary or not in the comments? And don't forget to hit notifications so you get the latest notification of any of my new videos, which I tend to put out when I see kind of big things going on. Otherwise, if you want this real-time insight every day of the week that the market is trading, check out wolfonwallstreettrade.com. The link is in the video description. Enjoy the rest of your weekend, everyone.